Today, I want to talk about the most asked question in the whole world. And no, it's not, will you marry me? It's, how can I save on income tax? Hi, I'm Lynette Harrison, and you are watching Accounting ER. If you qualify as a small business corporation, there's definitely a big tax saving for you. So let's start by looking at the tax calculation for a small business corporation versus a company. So on the right-hand side, we've got a tax rate of 28% for companies from the first rand profit shown. However, on the left-hand side, we've got the small business corporation tax, where they've taken the profit of the first 550,000 rand and they've divided it into three portions, and they are taxed at different rates. So let's just simplify this a little bit more. The first value is taxed at 0, the second value at 7, and the third value at 21%. Anything after that will be taxed at 28% as a normal company. But let's just translate this into values. So the first portion is actually tax-free. The second portion is taxed at 7%, which gives you 19,439. The third portion is taxed at a 21%, which gives you 38,850. And I've just added an extra 100 onto that to show you that only the amount that goes over will now be taxed at the 28%. So if we made over 100 Rand extra profit there, we will be taxed 28 Rand only on the 100 that goes over the 550,000. Now, looking at the company tax, getting taxed from the first rand, the same tax value would be 154,028 rand. The difference here is a saving of 95,711 rand. Money that is not going to go out of your cash flow that you can now use to invest in something else in your business. I just want to add that the tax benefit is not the only benefit for a small business corporation. There are also different rules regarding buying of assets. If you are buying an asset that is in direct line with production or manufacturing, you can write off 100% of that asset within that year of assessment. And other assets you can write off at a 50%, 30%, and 20% ratio, which are benefits that the normal company just doesn't have. To qualify as a small business corporation, there are 4 prerequisites. The first prerequisite is that you must be a juristic person, in other words, a registered legal entity. This would include a CC, a co-op, a private company, and a personal liability company, and therefore exclude a sole proprietor and a partnership, for they are trading as a natural person. Just in case the thought crosses your mind, a trust does not qualify as a small business corporation. All shareholders and members must themselves be a natural person. And those natural people cannot have any shares or interest in any other legal entity. The business activities would be for manufacturing and trading by buying and selling. The moment that more than 20% of your income is derived from personal services or investment income, you will no longer qualify. Coming back to a personal service provider, this is a person that is registered an entity, but they are providing a service rather than a product, and they would normally be rendering the service personally to the client. Now, they would not qualify as a small business corporation, but the exception would be if they have employed 3 or more full-time employees for the full year of assessment, and those employees have no connection to them or no relation to them, then they can still qualify. The last prerequisite is that your gross income be less than 20 million in the year of assessment. So it becomes clear to us, looking at that last prerequisite, that we could be fortunate enough to qualify as a small business corporation in 1 year of assessment and then not to qualify in the next year due to something such as a turnover fluctuation figure. So, if you qualify as a small business corporation, I bet this is you right now. If this information has in any way been useful to you, please give it a thumbs up. And remember, subscribing to this channel is totally free. Thank you for watching Accounting ER. Please let me know what your accounting emergency is.